What is going on, everybody? Welcome to another edition of the Daily Energy News Beat Stand-Up here on this gorgeous Tuesday, November 28th, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas. Rocking a solo show today. Had a great week off last week, so we hope everybody had a great Thanksgiving. I was traveling late yesterday, so Stu was able to step in, do a solo show. He happens to be traveling today, so I'm stepping in and rocking a solo show. But don't worry, I have two great articles lined up for us, and then we'll hop over to finance. First on the menu for us, richest 1% emit more carbon than the poorest 2/3, according to a new study. Absolutely unbelievable. Something I think we probably all knew happened, but it's really super interesting. The rich get roasted in this one, so we got to love it. Next up, Senate Democrats want the FTC to investigate pending oil mergers. Senator Schumer's 22 of his colleagues looking to break up the mergers that are happening. So, I mean, it's a bucket of laughs, folks. So we'll cover what they're trying to do in Congress. We will then quickly cover what happened in oil and gas finance. Prices down a little bit today, mainly off the back of that OPEC delayed meeting, and we'll kind of maybe dive into what some of the theories are around that. Nat gas prices actually spiked a little bit here in the opening as we record this here about 5:30. Rig counts up a little bit, and then we will quickly cover a Northern oil and gas deal, which actually fits in nicely to a new segment we're going to start doing. So that'll wrap up the show. Then we'll let you get on out of here and finish up your day. But before we do that, guys, remember, as always, the news and analysis you are about to hear is brought to you by the world's greatest website, EnergyNewsBeat.com, the best place for all your energy news. Stu and the team do a great job of curating that website. Make sure it stays up to speed with everything you need to know to be at the tip of the spear when it comes to the energy and the oil and gas business. You can hit the description below, see all the links to the articles, timestamps if you want to go ahead and skip ahead and hear about this Northern deal. Boom, you can do that. You can also check out dashboard.energynewsbeat.com. That's our data news product combo. We love that. Email the show questions at energynewsbeat.com. Just check us out. You can follow Stu and myself on LinkedIn, Twitter. Check that again, all out in the description below. But let's go ahead and dive into the show. First article, guys. Richest 1% emit more than the poorest 2/3, says Oxfam. Absolutely hilarious. We got the world's richest percent generated as much carbon emissions as the poorest 2/3 in 2019, according to a new Oxfam report that examines the uber wealthy's lavish lifestyles and investments in heavy polluting industries. I'll read this next paragraph. The report paints a grave portrait as climate experts and activists scrambled to curtail global warming. This month marked a long-dreaded milestone for the planet, where the scientists recorded an average global temperature that was more than 2 degrees Celsius above pre-industrial levels. Again, I feel that probably not true in terms of this increase. But again, the point of this is, according to this Oxfam's report, carbon emissions of the world's 1% surpassed the amount generated by all car and road transportation globally in 2019, while the richest 10% accounted for all half of global carbon emissions. The richest 1% are enough to cancel out nearly the work of 1 million wind turbines. So for all of those wind turbines going up in West Texas and the Midwest here, Al Gore is single-handedly knocking you down. You got to love it. The inconvenient truth is that Al Gore is bad for the environment. That's all I got out of here. This is David Schlotzenberg. He's the director of Sydney Environmental Institute at the University of Sydney. He said, quote, "None of this is surprising, but it's crucial." It's crucial. And he also goes on to say, "This has been a huge issue in climate justice. Countries don't want to pay for what they have done in the past. So it's interesting thing here is, okay, let's not talk about historic responsibility, but current responsibility." The recommendation is hardly new, but one that, quote, "climate activists continue to fight for, taxing the uber rich and using money to invest in renewable energy." I'm all about taxing Al Gore. I think we should have an Al Gore tax, personally. Whatever he uses, let's charge him 20% over market rate. There was a proposal to tax corporate jet travel, probably shot down by our favorite Heinz 57 senator, former senator, I should say, now climate evangelist John Kerry. It's not his plane, it's his family's plane. So he'd probably be out of it. They make fun of Kylie Jenner in this. I do find it funny. Kylie Jenner took a 14-minute flight. Man, I wish I could do that on a private jet. You have to admit, if you could afford to fly private on a 14-minute flight, you do it too. Now you should, maybe be taxed on it, but I'm not going to hold Kylie Jenner because I do the same thing. But again, this is, we all know if you're rich, you use more energy. That's kind of the point. It's why all other countries want to become rich. Now, the problem is to a point, the richer you become, the more energy used, but the efficiency goes up. But there is a point when you latch into this 0.01%, as this article says, that you do begin to use astronomical amounts. Who knew that massive mansions use more electricity than apartment complexes? Who knew? Who knew, folks? All right, next one here. Senate Democrats want FTC to investigate pending oil mergers. Got to go after big oil, folks. Senator Schumer and 22 of his Democratic colleagues penned a letter to the FTC asking them to investigate the acquisitions of Pioneer and Hess by Exxon and Chevron, respectively. Targeting bid oil. Let's see what they say here. U.S. Senate Majority Leader Chuck Schumer, we got to love him. 22 Senate Democrats, I'm sure they're geniuses, wrote to the FTC alleging that the multi-billion-dollar acquisitions by Exxon and Chevron would lead to reduced competition and higher prices for consumers. It's kind of scratching my head. Exxon doesn't set prices and ask his regulators to launch antitrust probes. This letter clearly shows, however, these politicians do not understand much about the U.S. oil market. Absolutely. That's the first thing I thought of. I mean, again, you got to come back to, and this is what I think, obviously they don't want to attack the merits of the deal. I mean, if they thought twice, if they thought for 10 seconds about who sets oil prices, the last thing they would do is come to Chevron and say, your acquisition of Pioneer is going to screw. If anything, Exxon acquiring Pioneer is going to get cheaper because there's going to be more oil because Exxon's going to now combine with Pioneer and drill up all their locations. Is that going to happen? Probably not. But in theory, it could happen. So I guess they look at it glass half full or glass half empty. I could look at it glass half full. I just think the interesting part is, you're too far in the weeds. You're missing the signal. It's like when they came out today, the FTC came out and was going to investigate the takeover of Subway by private equity. Your hard-earned tax dollars are going to make sure that Subway isn't raising their prices on you. That Subway sandwiches, or some, as we would call it, Scrubway sandwiches, are up. So now we've got Big Sandwich and Big Oil are the enemy. Really? It's not you guys up in Congress. I mean, it's hilarious. We're spending all our time worrying about Big Oil and Big Sandwich when maybe we should be worried about the issues at large. I mean, there's a reason people hate politicians because they do stuff like this. I love this it's a kind of an opinion piece that we're reading here. This little shows, however, that these politicians do not understand much about the oil market, its players, and their contributions to the nation's energy security. It's hard to understand how competition would reduce if Exxon and Pioneer combined to produce only about 5% of U.S. oil, which is a fraction of the oil OPEC members control about 80% of the world's producing oil reserves. The United States has 9,000 small independent producers that produce 83% of total U.S. oil production. Again, these are facts they could have clearly looked up, or whoever wrote this. I mean, if you think Chuck Schumer sat down and wrote this memo, you're out of your mind. He had one of his 60 associates do that. Or he had lobbyists do that. He probably had, someone from, Greenpeace's office do this. Soros probably wrote this. No, I'm just kidding. It probably wasn't Soros. Point being, if they had done, it's not about the, if they had done the research, they'd have never come to this. You didn't put it, there's no facts they had in this. And so, I love it when they come out, it clearly showing their ignorance on it. Big oil, big sandwich. FTC's coming for you. I mean, it's ridiculous, folks. Let's move to finance. We saw prices kind of are mixed. I mean, the big news coming out of this weekend was the fact that OPEC, which was supposed to meet yesterday, has now delayed their meeting by 4 days. The question is, why did they delay their meeting? I think that's tensed markets a little bit. It's really caused choppiness ever since Thanksgiving. We saw on Friday when that announcement came out, we did see the market drop from about 77 to where it sits about, we got all the way down to about 74, currently sits about 75.16 as we record this right now. Again, I think the reasoning that OPEC is pushing off this meeting has more to do with them trying to figure out if more cuts are necessary. I think we're going to agree that the 1 million barrels is legit. The real, I think people are wondering, will this mean more cuts? It could. It could also mean that they're infighting about maybe to lower cuts because countries are just wanting to take it. I mean, it's clear that the amount of leakage coming out of Iran and Russia is making up for whatever cuts are happening on OPEC. So you could look at it one way. Countries in OPEC want to produce more to take advantage of the opportunity to make more money. Or they want to look at it as cut to raise prices because they know that regardless of what happens, the leakage from Iran and Russia, according to Stu's favorite dark fleet, is enough to keep prices down. So I think it's something we're watching. We did see cash prices or cash rise a little bit, dollar index fairly steady today. So that didn't help prices. I think the only other thing that we saw drop was rig counts. As of last Wednesday, they were up 622 from last week. So that's, again, a change of 4 rigs. And what's interesting, rigs are always a lagging indicator from pricing. So whether this rig count is indicative of where prices were 2 months ago, I would agree. I would say that is true. So it's, again, interesting to see how this rig count continues to move. This week I don't expect to see an increase. I actually think, I would guess we'd see a slight draw in the rig count, just depending on some of the stuff. But as that rig count again to creep up, from an operator side, it'll be interesting to see how service prices continue to do. I know specifically some of the stuff I'm working with, our natural gas fracs haven't quite jumped in pricing yet to maybe take advantage of some of that higher nat gas pricing. I for those listening on podcasts, I use quotes because it's not higher, but you might be seeing a little bit better yields. I thought the only other interesting thing that happened today was Northern Oil and Gas, one of our favorite non-op companies, announced some bolt-on acquisitions, specifically in the Northern Delaware Basin. 2 different acquisitions, one in the Northern Delaware Basin in Lee and Eddy County, and then one small one down in the Utica, which actually institutes their entrance into that specific basin. That's so for that Appalachian one, it's pretty small. It's only about 23 million cubic feet a day. It's about 3,800 BOE a day, 100% gas. It's only about 0.8 net wells, 1.7 net wells in process. Operators Ascent Resources, so definitely some effective stuff there. What I think is interesting, though, is the bigger position is the agreement to purchase 3,000 net acres in Lee and Eddy County, New Mexico. And this is an interesting deal because Northern already owns about 90% interest in these lease owns interest in 90% of these leasehold, not 90% interest. They hold interest in 90% of these leases already. So it's more of an add-on, which means they really like what's going on there. Current production is about 2,800 BOE a day, 67% oil. They're on that 2 stream. They expect that 2024 production to average about 25 BOEs per day. So we love that. Nice slow decline assets, 67% oil. Significant growth on those assets as they continue to develop that. They see that net runway of 26.3 net undeveloped locations, which represents about 13.5 years of inventory to run through 2025 through 2030. What I think is interesting is this is in the exact region that our first deal spotlight is going to cover. It's not this actual position. It's another smaller non-op position, but it's literally the exact same. It's Eddy County. It's those multiple benches. You've got the Bone Springs 1, 2, 3, which are more of those carbonate plays, and then you've got the Wolf Camp right underneath that lower A, that kind of Wolf Camp XY as they call it. Then the lower benches below. Really interesting. So, what's interesting is we walk you through how you get to, well, what would you buy for one of these? And, is this going to be a good deal? they put a $17.1 million deposit down on it. I mean, they're going to, this purchase price is $170 million in cash and 107,000 shares of common stock. I mean, it's not cheap, It's about $57 million of cash flow, which represents about 2.8 to 3 times purchase price multiple. Again, you just get subjugated to really nice pricing early on in those assets. So, I'm going to hold a little reservation on saying whether or not I think this is a good deal or not. I'd recommend checking out our deal spotlight, which is going to drop probably this week or early next week. We'll keep you updated. You'll be able to see blasted all over social media, so you won't miss that. But, in terms of whether this deal is overpriced or not, I mean, I think a 2.8, 3 multiple is already a little bit high. You got to be pretty confident in the development plans, got to be pretty confident in your type curves. We do like Eddy County. That strong 2-stream production is got to be helpful. We do love that it's weighted about 67% oil, but I don't know. Could be a little pricey. You'll have to tune into the deal spotlight to check that out. But that's really all I've got today, folks. Appreciate you checking us out. It's a nice solo show. We'll get you out of here early. Stay strong here on this Tuesday back from Thanksgiving. Hope you've all recovered. I know I have. We'll see Stu and I back in the chair tomorrow and to get us going. But we appreciate it, guys. We'll see you tomorrow, folks.